Now, the dynamics between the US and China are increasingly important. The world emerging now from the ashes of the global financial crisis. Trade moves between the two countries, creating a hugely imbalanced economic relationship, though, which may now begin to be more problematic than ever. What, though, does it all mean for Australia, which, of course, is heavily reliant on Sino-America relations? Well, to explain all, I'm joined in the studio now by Professor Geoffrey Garrett, Chief Executive of the US Studies Centre at the University of Sydney. Jeff, great to have you with us. Headline writers going into a frenzy in the last week or so, calling this a dangerous game of trade chicken, because it started with tyres and then there was a tit for tat, but we all end up thinking, hello, hello. Where did this all come from?
Well, I think the underlying problem, Carson, is the fact that as both China and the US come out of the crisis, the path out for them is the same as the pre-crisis path. So for China, it's all about exports to the US in particular, and for the US, it's still all about consumer demand, with Barack Obama replacing private sector debt with public sector debt. So no change there in the underlying story. But I think what the frictions last week tell us is just how intense the political heat is on President Obama in the US. Everyone's been looking for early signs. Is he a free trader or is he more protectionist? Last week he blinked a little bit, and not surprisingly the Chinese retaliated swiftly.
Let's be honest about this. He might be getting pressure from within, from the far left, but he still has discretion. Part of China's agreement to get into the WTO back in 2001 was that there would be a provision giving the president that discretion. What was it? Section 421.
421,
we
yes.
Don't have to get too precise about it, but, you know, it just underscores that he is his own man. He is in that White House. He doesn't have to curry favour.
No, he doesn't. And I think that the thing that was important about the tyres isn't the dollars and tyres involved, it's the precedent. Because as you know, this provision said that the US can impose tariffs even if China's playing by the normal global trade rules, simply because tyre imports would dislocate the American economy. And if you're thinking about a dangerous precedent to set, not only in US-China, but for global trade, that's about as dangerous as it gets. The US is saying, don't worry, this is a provision that goes away in 2013, and it's only directed at China, but clearly it's captured the world's attention because of this precedent-setting nature.
Now, like it or not, the Chinese are getting clamours from within as well. The China Steel Rubber Industry Association actually say, look, about 100,000 jobs, $1 billion are at stake for us. But could they not have broken away from that and said, look, we won't tit for tat, we'll take the lead on this and we will not retaliate? There was a moment for them to shine and they kind of squandered it.
Yes, and I think that tells you the pressure in China. So they're talking about a new rebalanced version of the Chinese economy coming out of the crisis, one which relies much more on domestic consumer demand to drive growth.
But you were talking about the export imperative as well, but they are not kind of swinging back internally, you're arguing, as much as they need to be.
Well, they may be trying to, but I think that moving to a consumer-led Chinese economy is really, we're talking decades rather than months or years, and it amounts to a recoding of China's economic DNA. So in the short term, I think both in China and in the US, the temptations to blame the other side for their economic problems today are really strong, and therefore that would require very strong leadership to overcome those temptations. Now, on what China did this week, I think it actually had two elements. The first one was a retaliation, but then they sent the case to the WTO. That's been interpreted, I think, correctly, not as escalation, but de-escalation, because it'll take the WTO a couple of years to rule on this case, and we probably will all have forgotten about tyres by then.
How strong, as you talk about the leadership of China, is the will to recalibrate, to shift away from what is, after all, quite a deliberate policy of bringing people from the rural centres controlled into the more urban centres to manufacture? Now, the purpose being, it's all about the export trade. Now, how do you recalibrate on that basis? What do you do with that?
Well, over time, China's a consumer middle class seems to be the way forward for China. But I think that the government has some serious reservations about that. So in the longer run, they know, they've read their history, and a consuming middle class is the precondition for democracy, something that I think the Chinese government is a little concerned about. But in the shorter term, if you thought about policy instruments to get you there, you'd have to build a real social safety net, a Chinese welfare state, and a retail financial system in China that was pretty open and liberal. And I don't think the government is ready to sort of jump with both feet into both of those big policy reforms.
Is that, do you think, why there is so much push and pull on the composite in Shanghai, which is very much a retail market? On the one hand, citizens have got free rein to get in, but the government's still there saying, look, don't get too ahead of yourselves. We could just pull the plug on all of that.
Yeah, and of course, thinking about other issues like Chinese foreign investment abroad, Australia and the US, it's the opacity of the relationship between the government and these notionally private firms that clearly keeps the markets and foreign governments concerned. China will tell you that this is the free market in operation, but then you look at these personal connections and other things, and the heavy hand of the state seems always to be there.
Where does it leave America's role in setting a lead now? Because as hands are tied domestically, there are many policies that have to now get traction. Obama knows he has to win over his domestic support base. He'll go to the G20 and he'll presumably be reminded that he has to play by global rules. What's his response going to be?
The interesting thing there, I think, is that the world wants two things from Obama. They want him to be a leader, and they want him to be a leader on their terms, particularly on European terms. I think it was always unlikely that the European terms would be acceptable domestically in the US. That's even more so today because Obama is surely a weaker president now than he was 3 or 4 months ago, in particular because of the healthcare problems that he's had. So, take a case like executive compensation. The US was never going to go for a European-style hard cap on executive comp. I think it's even less likely that that would happen now, so that's why we're seeing, I think, Australia and other countries pushing for something that looks really in the middle between rambunctious American-style, pay them whatever the market will bear, and this European regulation model.
What are going to be the touchstone issues around the table at the G20 and indeed at Copenhagen now? Will he go into that forum with credibility if he's failed on healthcare and if he hasn't really got executive remuneration sorted?
Let's talk about the issues first and then the credibility second. In terms of the issues, obviously the headline ones will be about exit strategies from GFC bailouts, something about executive compensation, something about a new global financial architecture.
Acknowledgement that we'll all move in separate directions on that because we are all not the same.
Yeah, that's right. Coordination doesn't mean one global policy. It means coordination. I think everyone emphasises that in the G20. But the two issues that will be a little bit below the table will be this is the best opportunity there is, perhaps the only opportunity to get a pre-Copenhagen consensus on climate change. You got all the right leaders there. I wouldn't expect anything public on that, but you would imagine that the backroom conversations would all be about that.
And the spillover from this trade tiff with China and getting China to sign up to Copenhagen, has that really put things in jeopardy?
It was always going to be extremely difficult. I think there still is a deal on the table that the Chinese would accept. It's lower emissions reductions targets pushed further into the future, but critically with a lot of investment from the West in alternative energy. Now, the question would be, is that investment from governments or the private sector? I think Obama, because of his ties to the West Coast business elite in the US, might be willing to go for the kind of thing that Chinese-American entrepreneurs in Silicon Valley are asking for, which is just give us the opportunity to make big investments in China, and the Chinese government would have to accept it. That's the deal that's on the table. Will it be possible to ink that deal before Copenhagen? I think the smart money would have to say no, but it will be the deal that will always be there.
We'll have to leave it there. Do appreciate your insights, Geoffrey Garrett. We'll see you next time.
My pleasure, Carson.
We'll get an update following those key meetings that are set to happen next week, the G20 and then, of course, Copenhagen. Let's